You know, when a company decides it wants to go public, it has to publish its entire life story for the whole world to see. So today, we're going to learn how to read that story. We'll use a real-world example to see what a document that's over 300 pages long can tell us about a company's past, its present, and even its future. Have you ever actually seen one of these things? I mean, at first glance, it's just designed to be intimidating, right? It's hundreds of pages of legal jargon, tables that seem to go on forever, and so much fine print your eyes just glaze over. But here's the thing. Hidden inside all of that is everything you could possibly want to know before putting your hard-earned money into a company. This is where they have to tell the truth. So, why does a company create this monster document? Well, it's all for something called an IPO, or Initial Public Offering. You've heard the term. This is that huge moment when a private company basically unlocks its doors and invites the public in to buy a piece of it. It's how they go from a private club to being traded on the stock market for everyone to see. And the absolute key to this whole process is this document, the prospectus. Honestly, the best way to think of it is as the company's complete life story. It's a resume of where it's been, a full medical checkup of its financial health, and a super detailed plan for where it's going. And here's the kicker. By law, they have to tell you everything. The good, the bad, and yes, even the ugly. All right, here's our game plan. We're going to use a real prospectus to meet a company called Medistep Healthcare. We'll figure out their business, what's with the pads and powders. We'll follow the money, read that all-important fine print, and then I'll leave you with a simple toolkit you can use yourself. Okay, let's dive in. To really get a feel for this, we're not going to just talk theory. We need a real company, a real-world example. So let's meet our company for today, Medistep Healthcare Ltd. They're a pharmaceutical company based in Gujarat, India, and they just put out this very prospectus because, you guessed it, they want to have an IPO. Okay, right off the bat, the timeline tells us something really interesting. Check this out. The company, Medistep Healthcare, was only created in June 2023. But then, just 1 month later, it bought a business that had been around since 2018. So what does that tell us? We're not looking at an old company. We're looking at a brand new corporate shell that was basically wrapped around an older, existing operation. That's a key detail.
All right, so we know their origin story, but what do they actually do? What are they selling? The prospectus lays it all out for us.
It looks like Medistep has two different sides to its business. On one hand, they manufacture their own stuff, their own brands, like sanitary pads and energy powders. But on the other hand, and this is crucial, they're also a middleman. They buy and sell pharmaceutical and surgical products made by other companies. Whoa, okay. Now this chart, this tells the real story, doesn't it? A massive, almost 97% of their revenue comes from that middleman, that trading business. And their own manufactured products? That's barely 3% combined. This one chart tells you that Medistep isn't really a manufacturer at its core. It's a distribution company, plain and simple. But here's the thing. Whatever they're doing, it is working. I mean, just look at this growth. The numbers show their revenue rocketed from about 762 lakh rupees in 2022 to over 3,900 lakhs in 2024. Let's see, that's more than a 5-fold increase in just 2 years. That's absolutely explosive growth. So you see that crazy growth? That leads us directly to the core question for any IPO. Why do they need public money? Why are they asking for cash from people like you and me? So here's the plan. They're going to issue just over 3.7 million new shares of their stock to the public. And the money they get from selling all those shares, well, that's what this whole IPO is really about. And this is where the prospectus gives us total transparency. There's a section called Objects of the Issue, and it's basically the company's shopping list. They have to tell you exactly how they'll spend the money. And look here, a small part is for new machinery, but the vast majority, that huge chunk of over 1,200 lakh rupees, is for something called working capital. So let's put it all together. They want a little bit of cash for a small manufacturing expansion, sure, but mostly They need money to fuel that super fast-growing trading business. I mean, when your business grows 5 times bigger in 2 years, you burn through a ton of cash just to run day-to-day operations. And that seems to be the main reason they're going public. All right, we've seen the good stuff, the growth, the plan. But now we get to the really juicy part. Because a prospectus isn't just a sales pitch telling you the good news. It's legally required to tell you all the potential bad news, too. Welcome to the risk factor section. By law, the company has to disclose every single thing they can think of that might go wrong. For them, it's legal protection. But for you, it's a treasure map for finding all the potential problems. For example, let's just pull one out. Risk factor number 9 states, right there in black and white, that the company had negative cash flow from its investing activities. In plain English, that means more money went out for investments than came in from them. And then you dig a little deeper, and you find this bombshell buried in risk factor number 12. The company doesn't actually own its key properties, not its office, not even its manufacturing facility. Everything is on lease. And that introduces a pretty big vulnerability for the business, don't you think? And there is so much more. The prospectus also flags that they rely completely on other companies for transportation. They have a history of doing business deals with insiders. They've been late filing tax and regulatory forms. The government can put price controls on some of their products. And get this, they haven't even ordered the new machines they want to buy with the IPO money yet. Each one of these is a thread you can pull to understand the real risks. So, we've just taken a whirlwind tour through this thing. Let's take a breath. What did we actually learn? And more importantly, how can you do this yourself? Look, you can apply this to any prospectus by just following a simple 4-step guide. First, understand the business. What do they really sell and how do they actually make money? Second, follow the money. Why do they want to go public? Find that objects of the issue section. Third, and this is the most important one, read the risks. Go straight to that section. And finally, fourth, check the financials. Look for the trends in revenue, profit, and debt. And you see what happens? Once you know where to look, this massive document it transforms. It's not intimidating anymore. It becomes a powerful tool that gives you the complete, unvarnished, true story of a company. With this framework, you are now equipped to decode any company that's getting ready to go public. So the real question is, what hidden strengths? What surprising risks? And what amazing stories are you going to uncover in the next one you pick up?